This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Morgan Simon of the Candide Group. Morgan, thank you for joining us.
Thank you, Hall.
Can you tell us a little bit about how you got into early stage investing?
Sure. So I've been connected to the impact investment field for about 17 years now. And as investors who are specifically working to change the world, I think you often think about that from two perspectives, that you want to change things that are not going well, right? So that might mean divesting from fossil fuels or becoming a shareholder advocate. And then the other is building the type of world that you want to see. And that often means supporting innovative entrepreneurs, whether it's looking at clean energy or economic justice or other ways to be able to support society through different economic activity. So I was the founding CEO of an organization called Tonic. It's about 200 investors with $4.5 billion between them, and was looking at about 500 deals a year in the social space. And then last year, we formed a registered investment advisor, Candide Group, to be able to really expand this work and our social justice thesis.
Can you tell us more about the Candide Group and what it does?
Sure. Candide Group works with a very small group of clients, so high net worth individuals and foundations, and in particular with members of the Pritzker family under the Libra Foundation. And we do impact investment strategies across all asset classes. So that means that we're looking at opportunities locally in terms of things like community banks. It means that we're looking at venture funds that have an impact slant, and then doing a number of direct investments on our own. So over the past 6 years, we've done supported 57 investments into companies and funds.
And so for companies that are coming to you for funding, what do you look for in that group as far as what's the criteria that gets your attention?
Sure. So first and foremost, we're really looking for things that can transform society. So it's one thing to kind of make incremental change on the margins. It's another to say that we really want to make the world different, right? So for instance, rather than just going from $7 to $8 an hour in a low-income community, are we really creating opportunities for asset building, for benefits, for quality jobs? And in general, the other is that they say no profit, no mission. So we're just as interested in sustainable businesses as anyone else. I would say that we are at times thoughtful about terms, that there are many companies that can be successful that are not going to be a 10X, and that rather than doing kind of traditional portfolio theory of saying, let's shoot for the moon on a couple and expect the others to fail, I think we're looking at the opportunity to have more singles and doubles and to really create businesses that are the right size for their local environment, and that often are from less traditional entrepreneurs as well.
Well, I noticed your tagline is social justice and sustainability. What exactly is social justice?
Sure. So I think it goes back to, for me, a fundamental belief that people deserve to be treated the same. And that means that rather than just making someone's life a little bit better off, I want to make sure that they really have access to equal opportunities. And that's something we think about both domestically and globally. And knowing that that often can require systemic change and structural change, whether to financial systems, the way that the housing market is designed, all of these financial ways that we are influenced in our lives, right? That we have to be in a position to put people on a much stronger footing in how they relate to finance, as opposed to just saying, well, we're going to try to make people a little bit less miserable while they suffer from the consequences of what can be a very damaging financial system.
Impact investing is coming up and is replacing nonprofit investing in some ways. Can you talk a little bit more about the trend in impact investing and what's happening there?
Sure. So what I think is really important in terms of philanthropic contributions, they're always going to be necessary, and I think are particularly well suited for organizing and advocacy. And that when we think about long-term economic development, that really requires investment. So I think rather than saying that it would replace philanthropy, that it's about really expanding the pool of money that's able to do social good while also serving the other needs of investors in terms of financial returns. So I think that's what's become really exciting of people saying, well, rather than just the $1,000 a year or whatnot that I'm able to give away, I can make sure that all of my money is having a social impact all the time.
What's driving that? Why is impact investing really coming up strong across all these asset classes?
Sure. I think that for most people, it's a question of legacy. That it's one thing for you to be able to turn to your children and say, look at this wealth that I created for you to have options in life. But I harmed a lot of people when I did it, right? As opposed to being able to say, here's this great legacy of financial opportunity I created for you. And by the way, in the process, I created cleaner air for your children to breathe. And I made sure that the rivers would have water and that the people around you would not be suffering, right? So I think it's really thinking more comprehensively about our understanding of legacy.
So impact investing covers many different sectors and application areas. Where do you think it's having some of the biggest impact today? Which sectors do you think are seeing the best results from it so far?
Sure. What I really love about impact investing is that it's really everywhere. So whether it's looking at affordable housing options across the US and internationally, to food access, healthy food access, to clean energy, to, I could really just go on and on, creating economic opportunity, reducing debt, that it means that we're able to have impact at so many different systems levels. And then from the individual's perspective, to be able to really look at the areas that are most important to you.
And what do you think about across all asset classes? Where else do you see impact investing aside from just the startup funding and some of the new technology areas?
Mm-hmm. Yeah. So, and I should note that in my book, which came out last year, Real Impact, The New Economics of Social Change, I do devote a lot of time to helping people understand how to live an ick-free life, right? What are some of the ways that you can take the ick out of your investment portfolio? And that can be looking at things like cash, like private debt funds, like venture, like early stage, but that regardless of level of wealth, there are opportunities for individuals to be able to get involved.
Where do you think impact investing is going in the next 5 years? What kind of trends do you think we'll see coming up? Yes, it's everywhere and going everywhere, but where do you think it's going to be having the biggest change?
Sure. So one of the things that has been phenomenal has been the uptake by traditional financial institutions. And JP Morgan has been projecting it'll be $2 trillion over the next decade. And then the question is just for what, right? Of how do we make sure that as the financial instruments are scaling, that the impact scales along with it? And in the same way that I'm sure you, like me, have had those moments in the egg aisle of, well, what was cage-free again? And does it really matter if it's organic? Or, that we learn how to read labels and become conscious consumers and figure out when social impact is real. We're going to have to do the exact same thing for impact investment and make sure to hold the field accountable to impact as it scales. And that means that we can't just do it from the 40th floor of a bank, that we have to really have engagement from civil society to make sure that the people who are the supposed beneficiaries of these projects actually get to have decision-making power over them.
Well, great. Well, in the last minute or two we have here, what else should we be covering?
Sure. I think the other is just for the entrepreneurs that are listening who might have been thinking, well, I really want to have social impact with my business, but I'm worried if I talk about it, that they'll think that I'm not serious about making money, right? To know that there are increasingly a large number of investors for which that's a major criteria, right? That if you're not talking about impact, then they don't want to see you. And that's including a lot of very traditional financial actors. So for instance, people may have heard of Obvious Ventures, which was founded by Ev Williams coming out of Twitter, wanting to focus on world positive businesses. And I think as we've seen in the recent venture environment, so take, for example, Uber versus Lyft, the way that consumer trust in the values of a company can really have huge impacts on a company's fortune, right? That the delete Uber movement led to 500,000 people dropping within a month. So I think it's a really interesting time to be able to wear your values on your sleeve and to know that there are investors out there that will support you.
How best for the audience to get back in touch with you?
Sure. So morgansimon.com is definitely the easiest. And for more of our work at candidegroup.com. And then the book can be found on Amazon or at any major retailer.
Very good. Well, I appreciate you taking time to share this with us and hope to have you back on a future episode to talk further about these topics.
All right. Thank you so much.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.